JD.com's Undervalued Dragon's Dilemma. Strong capital return signals, a new dividend, and aggressive buybacks collide with revenue misses and mounting investment costs from a bold push into food delivery, igniting fierce debate over whether JD represents deep value or a value trap in the shifting sands of Chinese e commerce. Bull case: dividends, buybacks, and the deep value argument. The bull thesis for JD.com rests on a deceptively simple premise. The market is dramatically mispricing a fundamentally sound business. The announcement of a dollar annual dividend alongside a sustained share buyback program was received by value oriented investors as a pivotal signal. Management putting capital where its confidence is, returning cash to shareholders even as the company navigates a challenging competitive environment. At current price levels near $25, bulls argue that JB trades at a steep discount to intrinsic value when measured against its logistics infrastructure, market share in high margin products categories, and the depth of its fulfillment network. Assets that would cost multiples of the current market cap to replicate. The revenue miss in this reading is a deliberate near term sacrifice for long term competitive positioning. You're buying one of China's most sophisticated logistics and retail platforms at a fraction of what it's worth. The dividend isn't a distress signal, it's a confidence signal. Bear case: revenue miss and the food delivery gamble. Critics of the bull thesis center their concerns on the Q4 earnings report's most uncomfortable data points: a notable revenue miss and margin compression attributable to accelerating investment in new competitive ventures, most prominently the company's push into food delivery, a market segment where rivals are deeply entrenched and unit economics remain punishing. The bear argument is not that JD is a broken business, but that the company is voluntarily sacrificing near term profitability to fight on multiple fronts simultaneously. With Chinese consumer confidence under pressure and domestic spending remaining subdued, the risk is that food delivery investments consume capital without generating the market share gains that would justify them. Meanwhile, existing e commerce operations face intensifying competition with platforms with different cost structures and younger user demographics. Business position: logistics infrastructure and the new commerce frontier. JD.com's enduring competitive advantage lies in an asset that does not appear on a standard e commerce comparison: its deeply integrated, company owned fulfillment and last mile delivery network. Spanning hundreds of warehouses and a proprietary courier fleet, this infrastructure enables same day and next day delivery at a scale few global peers can match. A structural differentiator that becomes more, not less, valuable as Chinese consumers raise their service expectations. The food delivery expansion, while currently a drag on reported profitability, is best understood as JD's attempt to extend this logistics moat into high frequency, high engagement consumer occasions. Frequency of interaction drives platform stickiness, and food delivery, with its multiple daily touchpoints, offers a customer acquisition and retention lever that grocery and electronics retail simply cannot replicate at the same cadence.
Okay, you can find the link to this in the description box below. So the stock is up 3.22%. This is Friday, the 6th of March, 2026. 2.118 million shares have crossed the tape. 50-day average is usually 9.6 million shares. Beta is zero point 0.4. It doesn't is not really not always affected by the broader market. That's why it's whatever is going on with the broader market. As a matter of fact, it will not magnify it. It will actually depress it by a factor of zero point 0.4. Okay, statistically, that's how it has been behaving. So the stock is correcting within a longer term structurally it's correcting within a longer term bearish trend, but currently showing some strength within a longer term bearish trend. Okay, so the extrapolation is saying that this trend it has might remain in place up to Tuesday, the 10th of March. Then after that, the consolidation is expected to continue, to resume, to kick in from then on. Then after that, probably from The 1st of March, it might go into further contraction, but it seems here that it's saying that it might pick up some strength from the 15th of April, but that's a long time to come. That's a long time to come. So in any case, the projections are saying, let's see whether we have anything. We should have some upper projections. No, we don't. 23.36, 23.98, 24.99. Surprisingly, it doesn't have. Okay. Let's see now. This it had the pivotal projection of 28.32, and the algo stopped reiterating it on Tuesday. It was initially a downward projection, and just like we have always we've been observing, whenever they are in a lot of cases when the algos project these downward projections and keep on insisting on it, it always happens, and it happened. The stock is now at a discount to that downward projection, but attempting to see if it can retest it. So momentum, the price pressure momentum, that's it, of its 10-day moving average. Let's see what it's indicating. It's currently losing 36 cents roughly every day. Okay, but it's expected to begin to pick up, and there's a chance that okay, the stock has actually crossed its. Okay, yes, as of today, it's saying that it might attempt to cross its 10-day moving average. Fingers crossed. But okay, it's actually saying it might reject it. It might get rejected. It will not succeed in closing above it. Well, let's see how it goes. So far, it hasn't closed above it. So far the extrapolation is right. It's on point in the interim. Okay, it's on point in the interim. As a matter of fact, it's saying that it won't cross. It won't close above that moving out that the 10-day moving average until sometime in the 11th, maybe 11th, Wednesday the 11th. Okay, let's see how it goes. That may well be what may happen, or it may not. So let's see whether we can find what's going on its weekly chart, if there is enough data. On the weekly chart, yes, we have extrapolations here. We have lower prices expected to remain in place up to the 26th of May. So let's see. I think we have an alignment because we can see here nothing. It's not expressing any, not indicating any bounce. Nothing. If anything, there just maybe a brief attempt to bounce from the 26th of May, but outside that, it's lower prices all the way towards the 29th of June. So I think we can say we have an alignment. We have an alignment between these the two charts. The daily chart is indicating that a downtrend is expected to remain in place up to the 14th of up to the 14th of April, and that is also what we have on the weekly chart. Okay, coming back to the weekly chart, let's see. The stock is equally correcting within a longer term bearish trend. Okay, let's see whether we have any. No, nothing at all. Nothing to the upside. 16.98, 19.02, 22.3, 22.33. Nothing here. Nothing here at all. Nothing here ambitious at all on JD.com. Nothing at all. Yeah, not fantastic, really. Okay, let's see now. The probability of it retesting 27.57, 20, statistically just fractionally less than 50%. So yeah, we are, I mean, we're looking for something positive, and even the probability of it retesting the previous high is not encouraging at all. So it's so negative on the stock, and yeah, we'll see. Let's see how all of this will pan out. Okay, let's see whether there's anything encouraging on the 4-hour chart. On the 4-hour chart, okay, this it's obviously it's up 4.2% or thereabouts. Here we have an upper projection remaining in place up till the ninth, Monday the ninth. Then after that, the downtrend is expected to resume. So nothing positive again. Here as well, 22.38 is a down projection, nothing at all. Yeah, nothing at all. Yeah, so it's you can see here is this movement, this projection is now a downward projection, a pivotal one. So it might there's a chance it will retrace it, and the algos are saying that it will retest it. So far technically nothing encouraging on JD.com. Okay, so have a look, and see what you make of the stock. And thank you very much for watching this video.